Hello traders, Gary Wagner here just before 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 9th day of September 2020, and this is the daily report for gold and silver. We had a continuation of the rally in gold and silver, which really began yesterday, and a 180-degree pivot in U.S. equities. Once again, we see that rare occurrence when we have equities in the United States and gold and silver running in tandem to the upside. We'll talk about that in our opening letter, but more importantly, we will talk about our current trade and our exit strategy on today's show. But first, let's take a look at current pricing. Traders, we had a nice continuation of the rally in precious metals, which began yesterday. Unlike yesterday, when gold and silver both rose against a rising dollar, we had a mild tailwind from dollar weakness today, providing a little push. We're looking at December gold futures at $1954.90, putting it up about $11.70. The high today, $59.70. So just a few dollars off of the high itself. The low was $19.26. Silver had a really stellar performance today, up about 1 3/4%, net gain of 43 cents at $25.18. We spoke about the dollar. That was down about 0.2% at 93.26. And a couple of the markets that we're going to probably issue a trade alert in over the next day or so is GLD. That was up almost a full percent at 183.05 per share, and SLV, which was up 1.74% at 25.18. We did see a strong recovery in U.S. equities, and once again, we are seeing that unique event when equities, risk-on asset class, and gold and silver, safe haven asset class, run in tandem to the upside. Let's take a look at our technical studies and talk about our trades. As you know, yesterday we did recommend the initiation of long positions in gold futures and Forex, as well as silver futures. Both moved nicely to the upside. We're looking at a 720-minute chart. And what really stands out more than anything else is the fact that when we look at the former high, this is the high, of course, that was achieved back in the middle of 2011 at 1919. What we can see is that at this point, we can see a clear band in which this particular price point is absolutely acting as major support, right around 1920. We can see occasions where the market dipped into and below that area, such as here, here, and here, and an occasion when it certainly went well below that. This is 1875. But for the most part, if you look at the bodies, and the bodies represent where the market opened and where it closed, that's what that rectangle is, you can see that on 0 occasions over, let's say, the last month and a half, have we seen gold prices actually close below it or open below it. And that to me tells me there is real strength and technical support at this particular price level. So the next question we need to ask ourselves is, what are logical points for this market to move to, assuming that we continue to see higher pricing? And to that effect, we want to first start looking at a series of tops that came in. We can see this top here at 2000. That obviously will provide an area of resistance. It's a key number and it's a key level. Above that, we have this particular top here. That came in at 2023, let's call it. We have this top here, of course, at 2059.70. And then, of course, the record high for the year that comes in at approximately 2088. Now, while I don't think we're going to see a straight move up, I think we'll see a series of stair steps, a 5-wave process if we are truly in a 5th wave. To that degree, I am looking at this particular component, in other words, these numbers right here, as part and parcel of this first leg of the rally that I believe is just getting underway now. We really have to see it move above some of these tops first to say that we've moved out of a sideways market or a channel. But if that does happen, our first target has got to be sitting right at around $2,000 per ounce, which takes us to our upper level forecast. And realize, once again, this is a very long-term forecast. What we spoke about before was the first leg of a 5-leg move, where we would have waves 1, 3, and 5 being what's called motive or impulse waves. Here, here, and here. They move in the primary direction of the trend, and then our counter waves 4 and 2. Now, when we consider where the market could go when this is complete, what we have to use is a Fibonacci extension. And what I'm basically saying is that when we look at the move from the beginning of wave 3 to the conclusion, we then take our extension and begin that at about 1875, what we're calling the conclusion of the correction. If we get a 0.618% extension, that would take us to about 2192, a 0.78% extension, 2275. Again, that's a very, very long-term model. As I said, right now, I'll be very happy if we see this leg go to $2,000 per ounce. And traders, lastly, I do want to take a look at silver futures. This is the continuous contract representing the December month. That is the month that we are currently trading in. In terms of different levels that I'm looking at, again, we have this one top just above 29. We have this absolute top close to 30. However, we also have this top 28.50. We also see that matching up with this close here. So my first initial target for silver, should it continue to run to the upside, is got to be $28.50. Traders, maintain your current long positions in gold and silver. Maintain your current stops. We will look to move them up later this week, and we will also send out a trade alert with the recommendation to rebalance once again into GLD and SLV. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.